Hey everybody, Smart Silver Stacker here. Welcome to another live stream. So we've been talking about a potential escalation of the conflict in the Middle East and how that could affect global prices. And now it appears we are watching this play out before our eyes. So this is a story from a couple days ago. US and Britain say their navies shot down 15 attack drones over the Red Sea. Actually, this is from yesterday. U.S. warship now has shot down 14 suspected attack drones. These are launched by the Houthis, attempting to disrupt commercial shipping traffic throughout that critical shipping lane. Also, the British reportedly shot down a drone as well. So the attacks on vessels transiting the Red Sea are being stepped up in a big way, and this is going to have a huge impact on the global economy. This is going to drive prices much higher if it continues to escalate the way we are seeing here. Now, one of the reasons is that shipping firms are now going to be avoiding the Suez Canal. Two major freight firms, including MSC, the world's biggest shipping container line, on Saturday said that they would avoid the Suez Canal as Houthi militants in Yemen stepped up their assaults on commercial vessels in the Red Sea. And it's not just them. We also have Denmark's Moller Maersk on Friday paused all of its container ships through this region, joined on Saturday by the Swiss-based MSC. French shipping group CMA CGM has now announced the same thing. A quote from CMA CGM: "The situation is further deteriorating and concern for safety is increasing." We had a German container line, Hapag-Lloyd, said it might do the same. And you can expect more of these companies who run these vessels to avoid this critical shipping lane because the risks are just getting too high. Now, why does that matter? Well, the rise in Red Sea war risk premiums translates into tens of thousands of dollars of extra costs for a 7-day voyage. You can see here in this tweet from James Anderson. By the way, shout out to James. Go follow him on X. And you can follow me too, by the way, on X at Stack Smarter if you are inclined to do so. But this is an interesting graphic here he posted. It looks like it's from the Cradle, but it shows you just how far a ship will have to go now around South Africa here, around Madagascar, to avoid this area. And this does add days. It adds significant expense to this voyage. And in a global economy like we have, I mean, everything from crude oil to Beanie Babies is getting shipped in container ships. So everything will be affected, and it will drive the cost up. Now, you know, it's interesting. One of the things that Powell mentioned, I believe, in the last FOMC meeting was how this bout of inflation, which we have been experiencing for the past several years, is kind of unusual in that it wasn't all demand-driven. A lot of it was supply chain disruption-driven, quoting the fact that, you know, during the pandemic, there were all these disruptions to global supply chains. Well, it looks like that problem may be rearing its head once again, and this is going to have an impact on Federal Reserve policy moving forward. We're going to talk about that. We've also got, as James points out here in this update, shippers going around Patagonia too, given the Panama Canal drought. So it's not just the Suez Canal, which is having problems. We've also got the drought-hit Panama Canal. This is from Reuters. Now, apparently in January, they're going to be increasing the shipping slots they are offering to 24 from 18. But the Panama Canal, for about a month or two now, has had a significant problem due to droughts and low water levels. So this problem is not resolving, although in January it looks like some of the shipping may be getting a break, going from 18 spots to 24. This is still reduced from normal levels. And despite the fact that they are expanding the number of shipping slots through the Panama Canal in January, the authority warned that due to the continuing water crisis, it would, for transit dates starting on January 16th, allow only one booking slot per customer per date, regardless of when the slot was booked. So still, some significant restrictions here on this critical shipping lane. Slots are prioritized according to the highest bid in auction processes, full containers market, and customer rankings. So think about that. the cost, even if you are able to transit the Suez, or I'm sorry, not the Suez, the Panama Canal in this case, even if you're one of the ships that is able to make it through, it's going to be more expensive to do so simply due to supply and demand. The drought, it's been worsened by El Nino weather phenomenon, which warms the Pacific Ocean and has pushed up fees and traffic at the canal. It's forced fuel tankers and grain shippers to take longer routes to avoid congestion. So food and energy, two critical things for just about everybody, will be driven higher as a result of these problems. And let's talk about what might come of this in addition to higher prices. Well, the U.S. now is weighing strike options to deter the Houthis from Red Sea attacks. So thus far, the current administration has been hesitant to strike at these Houthi groups because they don't want to escalate the conflict with Iran being the backer of these Houthi militants in Yemen, the ones responsible for a significant portion of these disruptions in the Red Sea. But now the fact that these attacks are escalating and increasing in frequency, we may actually see the U.S. military responding. The Pentagon has in recent days moved the Dwight D. Eisenhower Carrier Strike Group from the Persian Gulf into the Gulf of Aden, off the coast of Yemen, to support a potential U.S. response to attacks. This is from a U.S. military official. These assaults on shipping in the Red Sea has had a significant impact on the commercial market. Maersk, the world's biggest shipping company, on Friday, as we mentioned earlier, has halted all shipping through this strait, and the Pentagon is bolstering its presence in the region, moving 3 additional destroyers into the Mediterranean Sea, joining the Gerald R. Ford Carrier Strike Group that has been operating in the Mediterranean. So we have a huge U.S. military buildup. Also, over the past week, missile defense destroyers Laboon, Delbert D. Black, and the Sullivans have arrived in the Mediterranean. So escalations, as we have been forecasting here for some time, are manifesting themselves now. This is going to make everything expensive for a variety of reasons. One, there's no knowing what a strike against the Houthis might lead to. If it leads to broader regional conflict involving Iran, well, that has a huge amount of potential to not only disrupt shipping, but to disrupt oil production. Iran producing about 2.2 million barrels of petroleum per day, a lot of that working its way over to China. But if that gets disrupted, as we've heard from the likes of Lindsey Graham, who says that, in the light of an escalating conflict, he wants to strike Iranian oil infrastructure. But also, we have the Strait of Hormuz, not just in the Red Sea, but in the Persian Gulf. We may see that come under, similar attacks as to what we're seeing in the Red Sea. A large portion, something like 20% of global oil production moves through the Strait of Hormuz there, right next to Iran. They have threatened to shut that down in the past. It's a tactic they have employed in the past. So expect further escalation here. Expect more inflation due to disrupted global supply chains, disrupted global energy markets, and also, with all this uncertainty out there, one thing that we know is going to be moving higher as the result of any conflict is the U.S. national debt, now at $33.924 trillion. I don't know. You think we're going to hit 34 by the end of the year? We still have about 2 weeks left in 2023. Give me a 1 in the comments there if you think this is going to hit 34 trillion by the end of the year. Give me a 2 if you think we'll see that number hit in 2024. One thing's for sure, this number is going to be moving a lot higher and very soon. And another price that I think is going to be moving a lot higher for all of these reasons is the price of gold. Now, we're a couple hours away from the gold market overnight trading opening. It's going to be interesting to see what we observe here as the price of gold begins trading again tonight. Of course, this spike that we had up last Sunday? Or 2 weeks ago now, I think, right? The spike up to 2150 in gold. This was on news of a attack. At least that was one of the contributing factors by the Houthis on shipping. So over the weekend now we have the potential for the U.S. to begin strikes in Yemen. We have a number of these shipping companies now completely avoiding the area. What kind of an effect do you think that's going to have on the price of gold? It certainly will be interesting to see. Now, I'm not telling you the price is going to spike up tonight. I mean, I have no idea what it's going to do in the short term, to be honest. It's just, something to keep an eye on. Of course, if I could call the price movements in gold to the day, I wouldn't be making YouTube videos. I wouldn't be doing much else other than trading short-term leveraged call options. But nonetheless, the trend for gold does appear to be higher. We are now back over $2,000, and any significant escalation is likely to drive the price higher. It could very well be the catalyst to drive the price to new all-time record highs. I see Yankee stacking in the chat there. How you doing, Yankee? Thanks for tuning in. All right, so let's change gears here a little bit. We'll talk more about gold. This is interesting. This is a story from Friday. Costco sold more than $100 million in gold bars last quarter. Now, that in and of itself, really not that significant of a fact. $100 million in gold bars is kind of like a drop in the bucket when it comes to the global gold market, a huge multi-trillion dollar market, very liquid, lots of trading back and forth. But I do find it interesting. Every time Costco seems to sell a gold bar, it makes its way into the mainstream media. This is the kind of fluff story that the mainstream media likes to carry around gold. I don't know exactly what the cause for that is, but it seems like you read a lot about Costco selling gold bars in the media. But it is interesting to note that they are selling that much in gold bars. Costco usually think about buying ramen noodles there and giant packs of peanut butter. But apparently they're selling gold bars too. That they're limited to 2 per customer. And the thing here, I just think it's interesting that this is what the media is talking about when it comes to gold. They're not mentioning that gold is hitting record all-time highs. Anyway. Thanks, Yankee, for that super chat there. His Smart Silver Stacker is not only smart, he's a super nice guy. So great to meet you, buddy. Yeah, it was great to meet you recently as well, Yankee. We'll be talking more about that in some videos on the channel soon. A Merry Christmas to you as well. And also, we are approaching the holiday times here, folks. Christmas right around the corner. I do want to say a Merry Christmas to everybody who supports this channel, all the stackers out there. It's a great community, and as we approach the end of the year here, I'm just incredibly grateful for all of you and this entire community. The fact that I have the opportunity to talk to all of you on a regular basis, it's a great thing. Thank you, Chef Stacker LA. Costco will put coin shops out of business. I don't know about that. I think there's always going to be a place for the local coin shops. And really, the bars over at Costco, they're not even that great of a deal. I've seen the pricing. It's a fairly low premium deal, but it's just a generic bar. I think if you want to get a really great deal on some gold here, maybe you're thinking of giving someone a really nice gift, or you just want to stack because gold is heading to new all-time highs. That's my belief, not financial advice, of course. But you should check out SD Bullion. Right now, they have got 1 ounce Canadian gold maple leaf coins, random year, available for $44.99 over spot. So much better than a generic bar, if you ask me. Nothing wrong with gold bars, of course, but when you can get a sovereign coin that's 4 nines fine for just $45 over spot, I think that is a steal. This is where I buy my gold and silver, sdbullion.com. Make sure you check them out. There's a link down in the description. And even if you see bars over at Costco, I think you'll get a better deal over at SD Bullion. Now let's talk a little bit about the Fed. This is interesting. Fed's Williams douses Wall Street's rate cut speculation. This is from 2 days ago. And this is a quote from this guy, Fed Governor Williams. He's the CEO of the Federal Reserve Bank of New York. He says, "We aren't really talking about rate cuts right now." Really? That's interesting, because it sure sounded like you were talking a lot about rate cuts when I watched the FOMC presser the other day. He says, "I think it's premature to be even thinking about that. As the central bank continues to mull whether monetary policy is in the right place to help guide inflation back to its 2% target." What is it? Anybody else watch the FOMC press conference with Jerome Powell and the new dot plot, which shows that the average respondent there at the FOMC, the average member, believes we're going to see 3 rate cuts in 2024? I don't know. The Fed is becoming bipolar about this messaging, and it's not the first time they've done this, to be fair. Sometimes they'll come out with some kind of dovish speak, and then they do this kind of damage control after the fact. But, perhaps this has something to do with the fact that as a result of all these supply chain disruptions, maybe Williams understands that inflation, when I say inflation in this sense, I'm not talking about the real definition of the word, the old definition of the word, the Austrian definition of the word, the expansion of the money supply. I'm just talking about higher prices. Higher prices are going to persist, and it looks like they might be getting a lot worse into 2024. Of course, we're already dealing with a huge amount of cumulative inflation from the past 2 years, and all this talk about beating inflation from the Fed, I think, is a bunch of nonsense. The fact that core CPI is at 4% and they're talking about cutting. But the thing is that the Fed is going to have to cut. That's my belief, that it's an election year. You've got insolvent banks. You have consumers who are going to be coming under a huge amount of pressure, already under a huge amount of pressure from all this cumulative inflation and the fact that their pandemic era savings are all blown through. Credit cards are at a record high. But also now the price of everything is about to go up if this escalation in the Middle East continues the way that it is. So is Williams just trying to, maybe put a cap on some of the enthusiasm, some of the exuberance that we're witnessing following the FOMC press conference, what Powell had to say? Hard to say here, but I think that really this bipolar messaging from the Fed, 1 week they're talking about 3 rate cuts. The next week we got this guy Williams telling us that they're not even talking about rate cuts. I mean, are you kidding me? They were just talking about it, right? I mean, we saw it. You can go back and watch the press conference. Been talking quite a bit about rate cuts. But maybe it's just because they know that they're stuck, that they're going to have to sacrifice the dollar on the altar of inflation to bail out this bankrupt economy. That is very likely what is going on here. At least that is my take. It's the only way I can really explain what's going on here. And the Fed, of course, they like to say that they're data dependent, but if they were really data dependent, they wouldn't be talking about cuts now, because inflation is still a huge problem. Anybody who goes grocery shopping knows everything is a heck of a lot more expensive than it was a year ago. According to one study, compared to 2021, the average American family now spending an $11,000 higher just to maintain the same standard of living that they had 2 years ago. So inflation is not beat, as Williams points out here, but the fact that the economy is, a debt-based economy. We just saw commercial credit at all major banks go negative for the first time since 2008. There's only so much that the economy can handle without getting a complete and utter collapse. And I believe we are going to see the Fed cutting, but inflation is not under control. That's the bottom line here. And that is why I'm continuing to acquire hard assets like this gold maple leaf. That is why I believe that gold is not done on its bull run. I mean, just look at this cup and handle formation here on the long-term chart of gold. Gold's going to blow up when it closes above $2,100, and I'm sticking to that forecast. That day, I believe, is around the corner. Is it going to happen before the end of the year? Possibly. I mean, again, who knows? I don't have a crystal ball. I can't time things, but I think in 2024, certainly it's safe to say that gold is going to be hitting new all-time highs, and it's going to be moving much faster once we get a close above this line and above the $2,100 level. That hasn't happened yet, but there's a lot of factors at play here that could contribute to that. No matter what John Williams says, the Fed is 100% talking about cutting rates. We got Pirate Metals here in the chat. Thank you, sir, for the support. Higher prices are probably here to stay. It's going to be a slow death for everyone, a race to zero for savings. Yeah, and if you are fortunate enough to be able to save some money despite the weakening U.S. economy, again, not financial advice, but I would consider at least converting some of those savings into real money and not trusting the fiat dollar, because one thing's for sure, we are going to have much more debt, much more money creation. In a debt-based system like we have, creation of new debt is akin to the creation of new currency. They're one and the same. And this number is going to continue moving much higher. How do you know that? How do you know that the debt is going to continue to explode? Well, I mean, yeah, endless warfare, new record, NDAA, $886 billion, the highest defense budget on record. But also, don't forget the U.S. unfunded liabilities down here, $212 trillion. They got to get that money somehow. They can't tax it. There's not enough wealth. So they're going to be borrowing a lot more money. And I think that means the Fed is going to have to get into these markets and buy up a lot of that new debt. They're going to be returning to QE. They're going to sacrifice the dollar. And that means that the price of precious metals is going to be moving much higher. Oh, Yankee says, put what you think the interest rate would be if driven by a free market and not the central banks. My guess, 12%. Yeah, another interesting thing to think about, Yankee, is how high would U.S. Treasury yields get if the Fed were to actually normalize its balance sheet? You know, they've been doing the QT, selling off assets for some time now. They've got a little over $1 trillion sold back into the market, but they still have a balance sheet well in excess of $7 trillion. So just imagine how high the yield on U.S. Treasury bonds would become if the Fed were to normalize that in any reasonable measure of time. They would go through the roof and the whole system would collapse. The unrealized losses on the banks' balance sheets would explode. The banks would become even more insolvent than they are. It's an impossibility. And before that happens, the Fed, rather than normalizing their balance sheet, they're going to expand it significantly. At least that is my take. So, let me know what you think about all of this in the comments down below. Do me a favor, smash that like button, share this video with your friends. Merry Christmas, everybody. I'll be talking to you again many times before the holiday is here. So stay tuned for more videos and more live streams, and stay safe, everybody. Happy stacking, and I will catch you next time. Smart Silver Stacker.